Well, we would see a market move this morning if we hear more clarity from Steven Mnuchin coming up. We're going to be talking with the Treasury Secretary in about an hour and a half. The markets are looking higher right now. This follows the 9th consecutive record close for the Dow Industrials. Overall, the major indices ended yesterday's trading session mixed following the release of the Federal Reserve minutes. Now, those minutes indicated that we could see an increase in interest rates fairly soon. Joining us right now is Stifel, Nicolaus, and Company Chief Economist Lindsey Piegza. Lindsey, good to see you. Thanks very much for joining us.
Thanks for having me.
Your takeaway from the Fed minutes yesterday, you think we'll see interest rates move higher next month?
Well, I think it's very clear that there are a number of Fed officials that would be comfortable with continuing to remove accommodation near term. But that does remain contingent on further improvement in the economy. So if we continue to see evolution, a positive evolution in the labor market and inflation, certainly they're willing to move forward. But tempering that argument is a growing cohort of officials that see this veil of uncertainty around monetary policy from a range of issues, including a strong U.S. dollar to fiscal policy.
Yeah.
Now, the minutes didn't specifically talk about any policy specifically or name President Trump, but they did talk about the timing, the specifics, the size of fiscal policy could easily increase or decrease economic activity.
Yeah, I think that's a great analysis because it feels like things are getting better. Nicole Sheridan is with us today from TD Ameritrade. What are you seeing in terms of the backdrop there? Would you expect a Fed increase in March?
I think after the minutes yesterday, the thing that our traders are talking a lot about is the expectation is lightened a little bit. Like the Fed funds expectation of a rate move in March has moved down to 18% from 20%. I think it was a little more dovish yesterday.
In terms of markets, volume has been on the light side. Not a lot of volume, even as we hit record highs. Does that concern you?
Well, you and I are going to talk a little bit later about what our clients are thinking, but they're still extremely bullish. I think the markets seem very much propped up by an underlying level of buyers. If we see a slight correction, they're there to buy in on the expectation of Trump's tax reforms.
Lindsey, how do you see it? A lot of policies coming that you would think will help the economy.
Well, certainly there's the possibility of this pro-growth agenda boosting the economy, but right now it remains political promises. We haven't seen that legislation come into play, so there remains this big question mark. And I think that's in part why the Fed was so unclear about what fairly soon means. Fairly soon could be as early as March, but it could potentially be delayed to June or beyond if we're still waiting to see exactly what fiscal policies are put in place. So right now, with the economy still on very moderate footing, there's no sense of urgency for the Fed to take action until we know what fiscal policy is going to look like.
Do you think, Lindsey, it's Dagan McDowell, do you think that investors have bought too much into tax reform, tax breaks, repeal and replace on Obamacare happening this year? Or is there, if Washington can actually get it done by, say, late summer, early fall, is there even more potential upside if that timeline is pulled forward?
Well, the market is always forward-looking, and looking at the market, it does seem as if there is a vote of confidence that the Trump administration will follow through with this proposal of reduced regulation, simplifying the tax code, and buoying the economy up from this very stagnant 2% growth pace. But again, if we look at the fundamentals of the economy, it's very little change from prior to the election back in September. And so the U.S. economy is still at this 2%-ish growth range. Inflation, yes, is on the rise a little bit as a result of energy prices bouncing back, but there really is no meaningful underlying change as the market would imply looking at these new record highs.
So what do the markets want to hear from Steven Mnuchin this morning? We're going to be speaking with him at 8 a.m. What do you want to hear as a market participant and watching the backdrop from the Treasury Secretary?
Well, I think anything pro-growth, anything positive. Again, the market is looking for reassurance that the current levels are justified by policy that's going to expectedly come into play down the line. So I think anything positive, anything pro-growth will continue to support the market levels that we're at right now.
That's what his priority has been, all about growth, Lee Carter, right? I mean, that's why they're talking about tax cuts and tax reform. That's why they're talking about rollback in regulation, to move the needle on growth.
I mean, look, he's doing everything he said he was going to do. I don't see any reason why we should doubt that he's not going to move forward with a tax cut, with the rollback of regulations. He's following through,
Yeah.
and that's something people are surprised about. He's done 20 executive actions in a month, and now he's continuing to focus on these things. Even Paul Ryan came out and said, look, we've got the plans, we've got a 200-day plan, we're going to put it out there, we're going to make it happen. And I think a lot of people are responding to that. Now, I've heard on the left a lot of people saying, look, all of this growth that's happening in the stock market is because of President Obama and all of the policies that were there before it. But underneath that,
come on.
I know.
Come on. Why'd the market start rallying after President Trump got elected? Because President Obama
Going up
was
10% since
Why
election
are
day.
they calling it a Trump rally then?
Right.
Right, exactly. I just really want to quickly point out that Phil Gramm, the former senator, has an editorial in the Wall Street Journal today about, and I'll just read you the headline, we can talk about it later, how border adjustment poisons tax reform. Using the word poison.
And it has poisoned tax reform in the whole conversation, hasn't it, Dagan? Because the whole campaign, we didn't hear anything about a border adjustment tax. All we heard about is lowering taxes, and now all of a sudden it's 20%, 25% on imports?
He said it's political industrial policy, basically picking winners and losers potentially, and that it will convulse the economy. Convulse. We can talk about it.
And we'll see what Stephen Mnuchin has to say about that. Lindsey, Piegza, good to see you. Thanks so much.
Thank you.
We will see you soon.